Hello, everyone. Good evening to one and all. Welcome to the webinar. Can you hear me? Can you all give me a thumbs up if you can hear me? Can everybody hear me? Perfect. Okay, I get a lot of positive responses. All right. So I'm Divya from Zoho Books team, and I welcome you to this webinar, Navigating Taxes and Accounting for E-commerce Businesses in India. So this webinar is specifically focusing on the accounting and taxation part of e-commerce businesses. Now we're in the midst of the holiday season, which is especially important for e-commerce businesses. So in this webinar, let's talk about all things e-commerce, accounting, and taxation, which is the right time to introduce our speaker today. So for those of you who do not know him, let me give you a brief introduction. Dr. Gopal Krishna Raju is a qualified cost accountant hailing from a family of chartered accountants. His profession may be accounting, but his true passion lies in teaching. With over 26 years of experience, Dr. JKR is highly accomplished chartered accountant, insolvency professional, registered valuer, and arbitrator. He's a partner at the firm CA Gopal Rao & Co., headquartered in Chennai, with branches across various locations in South India. He is a seasoned speaker on information technology, finance, and taxation, and is also a sought-after visiting and guest faculty for numerous corporates, B schools, and prestigious institutions such as IIM and the Indian Institute of Corporate Affairs. He has shared his experience through the written word as well, authoring 2 books, Standard Costing and Variance Analysis for Professional Students, and First Lessons in Information Technology for CA students, with 2 editions. Fondly known as the Rajnikant of valuation among his peers, he brings a unique blend of experience and enthusiasm to our webinar today. So we would be discussing with him. He will give us a small introduction about what he's going to talk as well, and he's going to begin. So before we dive into the webinar, I just want to give you a quick heads up on the Q&A session that we've opened up. So you have a Q&A tab available. If you have any questions for Dr. Gopal, you can post them all here, and he will be able to answer all your questions after his session is over. So without further ado, let's begin the session today. Over to you, GKR sir.
Okay, thank you very much, Divya. Hope I am audible and visible clearly. You have to excuse me for the side sounds and all. Hope my voice will be audible and it will take care of that. And thanks, Divya, for the nice introduction and for organizing such a wonderful webinar, especially navigating the e-commerce business in India from the perspective of tax as well as accounting. And Zoho platform especially is a facilitator, enabler, and I'll also use a word called a catalyst for all the business people, especially those who aspire to take their current physical business to an online platform, to an e-commerce platform. Their tools are, I will say, will be an enabler. But I'll try to focus in my session more on how, as a businessman, you have to focus your attention in leveraging it to the level called a e-commerce business. Today, I'll start with and Divya, you have to help me whether I should restrict my discussion in English only, or if possible, मुझे हिंदी में भी आती है, entire session में हिंदी में भी करूँगा, or if required, even in Tamil also. If all the audience are in Tamil, we can even speak in Tamil also. So what, Divya, you are recommending? Shall I continue?
I think we have a mix of audience who might be from different regions of India. So I think we can stick to English in this webinar. And if anybody prefers to get answers to your questions in specific region language or English,
give to the audience, and
yes.
you can put those queries also. In between also, you can raise your queries. And there is a Q&A box as mentioned by Divya. Please raise your questions then and there. I'll first start with a very interesting piece of practical things that is happening. Number one, There were times when people used to share their visiting card, and the visiting card name, address, the trade name, company, logo, and address of the location, everything will be there. Tax will be there, phone number, everything will be there. But today, we have come a long way, and today's visiting card size is same, but the data has shrunk. Today, name will be there, and maybe logo will be there, and the mobile phone will be there, email, and URL. That's the visiting card. And people go one step ahead. No, I need more details. Then they put a QR code. So scan that, then it will show you where the location is, Google Map. It will give the entire list, address, profile, everything it will. So today we have gone from a physical mode of visiting card to a digital visiting card. And our business place also, like the workplace, have become home or office. The post 2020 and even pre 2020 also, there were companies, they were preferring their workplace to be both office as well as home, because home was considered to be an office, and office was not considered as an office at all. Everywhere, wherever you are, it is office only. So today workplace scenario has changed. Similarly, business place also is changing. Everybody, whether it is a restaurant, from a restaurant business, even agriculturist. Today, I have seen one particular website where one agriculturist owning 150-acre farmland in Andhra Pradesh, he has a website. He has actually put what are all the produce he will get 1 month later, 2 months later, puts that in website. So he need not even go to market. He will have a market. He creates a market in the virtual space. So today, this e-commerce is a model which is available for business people to explore, either to sell their product online, whichever may be the product, whether it is an agricultural product or a manufactured product, or they want to go for a second-hand product. Today, everybody know I can sell a two-wheeler, a four-wheeler online. So, and services also. So today's e-commerce is such a big place where you can transfer or you can expand your business to an online space. Now, when you expand to an online space, there are some maturity levels you need to have. Now, what do you mean by maturity level? The number one maturity is you need to first appreciate what is the kind of business I am into. For example, I am a manufacturer. I want to become an e-commerce manufacturer. So it is not e-commerce. You are not going to manufacture. You are going to sell your manufactured product in a virtual space. I am a trader. I want to have. So today many stores. I'll just share with you some of the interesting stores. Even very big companies. For example, Tanishq. I'll show you Tanishq. So Tanishq is also in online. So whether it is GRT or Tanishq, everybody they want to have their space online. So first I need to understand what kind of business I am into, whether how I have to go to an online. So what I'm going to do now, I'm first going to share with you that particular aspect. Then I will take you to the accounting and the other incidental aspects. So it is like, I just want to start with this. Why start an e-commerce business in 2024? I'll first give you one number. This number will be quite, the total e-commerce, India's e-commerce business in India, you know what is the size? It is 8 lakh crore. It is 8 lakh crore. So now you have to put zeros. 8 followed by 5 zeros. And after that, you have to put another 7 zeros. This is the total size of business in India. E-commerce business. Now, when I say e-commerce, it includes goods as well as services, both. So today you can market your service also. I am a consultant. I can market. I am a air conditioning repair specialist. I can have a space in e-commerce. I am actually an agriculturist. So therefore, goods, services, as well as producer. Today, producers also have come. Now, when I say producer, it is not a film producer. It is agricultural producer. So everybody, they are into this particular space. So goods, services, as well as producers. So everyone. Now, what is the next point we need to understand? What do you mean by e-commerce? So I'll just take you to a term called e-commerce operator. So this is a very important term to understand who is meant by e-commerce operator. So we can call them as eco. We'll call them as e-commerce operator. Now, anybody who owns, generally what you will feel is, oh, if I have to bring my business to online, I need to have a, if I have to bring my business online, oh, then I need a website, I need a server, I need nothing. You don't need you don't need a server and all. You have to only hire a space in the web, in the cloud, where you will have a website. You need a connect. Somebody will type whether Annachi Kada, okay, is there in website. Whether so and so Dukan is there in the website. So then he needs an address. So first you need to create a website. You need to list all your products there or services there. So I'll just share with you. So what do you need to do? So what is an e-commerce business? So what do you need to start with? So you can actually, you have to start with having an address first. Okay. Now you have created a website. Like I'll give you some interesting examples where you can have a website. Some 10-20 examples of sites I will show you how people have created a website and how they are successful. So number one is you need a space. So I'll say who is an e-commerce operator? I'll come to this. So step one is you need an address. You need a web presence. Now, how do you need a web presence? A web presence is possible only by having an address. Now, so that we call it as a website. Now, the next step is how do you actually convert your business to that? So that is the next step. So the next step is advertisements. So you need to pull people to that site. You need people to come to that particular site. So we need to understand what is meant by digital marketing. Okay, so you get SMS. Okay, so that is one way. You get SMS through your mobile phones. So you can do a WhatsApp messaging. You can send emails. You can have a YouTube campaign, sir. So advertisement running in YouTube's. So Facebook has become old now. So you can now go for Instagram advertisements. You can now go for advertisements in Twitter Spaces. So that is X Space. Then you can go for your LinkedIn advertisements. So all these are spaces where it will direct you. So today you go to any YouTube, you open a YouTube, first thing that will come is an advertisement. So why? They want people to take you there. You open a Facebook. So you open a Facebook, so people will take you there. First, you click there, it will take you to that particular website. So that is the next step where you make people to familiarize with that step. Okay, now come to the step 3. Okay, that's a very important. So I've done both. What is the next step? You need to go for the maturity level. My maturity level should increase. What do you mean by this maturity level? So today, I'm coming to the next concept to call the taxes and the accounting part. Okay, the taxes and the accounting part. This is where my discussion will be more about. Okay, so more my discussion will be on the taxes and accounting part. So what do you mean by that? So all these years, I used to manufacture, have my books of accounts in my location itself, and my invoice will be there. I will record the invoice, whether physically or digitally. I'll have my books of accounts, and sales I will record it. And at the end of the year or end of the month, I will find out what is my total sales, what is my total purchases, what is my input tax credit, what is my output liability, subtracted, pay the GST, file the GST returns. Now, there are many developments you need to understand with respect to this. So, physical model of doing business and the electronic model of doing business, there is a there is a upgradation in the maturity level. Now, what is that? So, number one, there are certain developments that have happened in the goods and service tax law as well as under the income tax law. So I will just share with you some of the developments, but being a very technical subject, first I will make my point clear with respect to the accounting part. I repeat, with respect to the accounting part. Now, let me presume that I am into online coaching. I am into some online service providing. I do consulting. I do advisory. I'm a Vastu consultant. I do only online consultation. So if you do an online consultation, you need a website. You need to give a time slots. People have to book the time slots. They have to pay money. Then you will come online and you give a consultation. So you need to design. So your physical business you have to convert to a digital level. Number two, most important is you are now integrating your bank account to your website, because now you need to collect the money, because at the end of the day business is equal to money. So that's very important. So that's where your accounting, taxes, everything will come. So I was mentioning about the maturity levels. So taxes and accounting. So in this, the step 4 is your collection, your money. So your business is equivalent to money. How you are going to collect money? Through online. The moment your business is connected through online, your business, your bank account, okay, your bank account becomes online. Okay, so then the question of taxes, accounting goes to the next maturity level. So when I speak about maturity level, it is not about only the basic taxes and accounting. You mature to the next orbit of business with respect to bank accounts, with respect to money collections, with respect to raising an invoice. You may raise an invoice online. So raise invoice online. So you give services online. You deliver goods and you monitor it online. So all these happen. So that is why I said maturity level is next level. Next level you go for the maturity in terms of business process, in terms of documentation. Okay, so there will be documentation. So in terms of the various process in your business will be mature. So then I will share with you the developments that has happened with respect to this. So number one is which I want to share with you is the accounting part. The next which I will be sharing with you is with respect to goods and service tax, with respect to income tax. So these are all the places where I will leave the floor open for the participants to ask questions, because there will be certain technical aspect. For example, there are online advertisements. So if you are into, sometimes people will do business like this. So there will be a doctor, there will be an advocate, there will be an engineer, there will be a Vastu consultant. Now you will be a digital marketing person. You will do the digital marketing for them. So digitally only you will give the services. You will promote their business, and thereby you get business. You get paid. Now, when you do advertisement, so at that time, then how the impact of the laws are applicability. So one by one, I'll try to share with you the developments. For example, so recently there are certain provisions that has been brought out under the Income Tax Act as well as under Goods and Service Tax Act. Let me tell you one example. So Goods and Service Tax Act. If you are an e-commerce operator, so now who is an e-commerce operator? I'll give you. Say for example, you have there are only two people in a business, buyer seller. If there are only two people, the question of e-commerce operator will not come. The question of e-commerce operator will come only when there is a third party. Who is a third party? Buyer, seller, and there is a site which has been operated where it connects the buyer and seller. I repeat the word. There is a third party who is involved. So where he connects the buyer and seller. So through the website. So that person who operates the site is called an e-commerce operator. Sometimes what will happen, the site itself will be belonging to the seller. So like for example, I was referring to Tanishq. Tanishq website is actually developed by Tanishq, operated by Tanishq, sold by the jewelry or the watch, whatever it is sold by Tanishq. So there is no e-commerce operator technically. So e-commerce operator is a third party with respect to buyer and seller. So now you have to appreciate the maturity level at which the business happens. So that's where the law has actually evolved, and why this particular model has come, I'll explain. So we are now 20 minutes past 5 o'clock. Now I am sure all of you are aware about the various introduction about the e-commerce. Now I'll go to the next hierarchy with respect to e-commerce. So point number one. So let me take the concept of e-commerce operator, which I was referring to, and that's where the tools of various tools, gadgets, support softwares that is required will actually you will actually understand that yes, there is a requirement for this. So let me take you to that definition first. Please look at this. It's a person who owns, operates, or manages electronic facility or platform for e-commerce. This is most important. Okay. So who owns a website or who operates a website or manages a website, okay, of our platform for e-commerce. So please understand this particular point very clearly, that you run a business, but the site is managed by somebody else. The site, normally it happens. You will not run the site. You give it to some developer, some e-commerce operator, who will actually manage, operate. Now, what do you mean by own? The site will be owned by the person. Sometimes we have the server. The server company will develop the site and they will maintain the site. So they will own. So sometimes the person itself can own. So for example, Tanishq, they themselves own the site. They themselves operate the site. They themselves manage the site. So then Tanishq is called e-commerce operator. So please understand. So you need to appreciate when you go for an accounting part or when you go for the tax part, in e-commerce, how many people are involved? Is it only two people? Buyer, seller. It's my site. I manage, I operate, and directly I connect with the seller. Or no. I only manufacture. I have a site. It is actually operated by somebody, and I only give the data. I get the orders from them, and then I do business. So collection happens. This can be a third-party site also. For example, the seller will be registered with sites like Amazon, sites like Myntra, sites like the various. So they are also called as e-commerce operator for your information. You now have the various sell your house, sell your two-wheeler, sell your four-wheeler, sell anything. We have OLX. So OLX is the e-commerce operator. You will be the seller. Somebody else will be the buyer. So please understand the model here. So you use the services of a third party software, third party, a portal. So e-commerce operator, eco. So you have to be very careful with appreciating your business model. So are you going to own the website? Are you going to operate the website? Are you going to get the orders directly or the instructions directly from the buyer? Or you will take the help of an e-commerce operator who will support your business and who will give service to you. So technically the e-commerce operator is also giving services to both the buyer as well as the seller. I repeat, he is giving the services to both the buyer as well as the seller. Good. So then the entire business of the buyer and seller. So actually the business belongs to the seller. The seller's business will be captured by this e-commerce operator, and the e-commerce operator is obligated to inform the government. Is obligated to inform the government. Example, if it is GST, I repeat, if it is GST, then billing will be raised by the respective e-commerce operator, and GST will be collected, and repeat, GST will be collected, and the information about the GST collection will be informed to the government of India. Who? E-commerce operator. Of course, money collected belongs to the seller. It will be remitted to the seller, but there will be an element of tax collection at source, TCS. It will be withheld. A portion will be paid. For example, 18% is GST. 1% will be withheld. 17% GST will be given, and 1% will be paid. Again, it will come back to his account only. So all these concepts are, the purpose is to bring transparency in the e-commerce model. So as a businessman, you need not worry about the technical part of it. What you should understand with respect to this e-commerce model in taxation is, number one, in case you involve a third party, the third party will be subject to the supervision by the government. In terms of, for example, today we have a concept of 194O of the Income Tax Act. Equalization levy is there. For example, you engage somebody to do an online advertising. You pay to them an online advertising. If that company is in India, then the concept of equalization levy will not come. Else, equalization levy will come. So I will not be technical now, but I will only make one point very clear, that the income tax as well as the GST has taken a one step ahead with respect to this e-commerce operation in India. So I'll invite queries from the participants. I'll also ask Divya to unmute the participants who are raising hands, who will be asking questions. So let them ask questions. I'll be happy to answer those questions parallel. So I'll just conclude with 2-3 points. Number one, if you are want to actually take your business to the next level, that is from a physical level to an online level. I will also have a business in physical level and also an online level. Then you need a process to follow. You need a website. You need a digital marketing. Number two, you have to understand that you need to mature yourself with respect to accounting part and taxes part. Now, what is that? So whether a third party is involved or not, you need to be very clear about it. If third party is involved, third party also will, that is your e-commerce operator, will collect the taxes, will detect the taxes, and will remit the taxes, and will inform the government about this entire e-commerce operation. Today, the e-commerce business size is 8 lakh crore. How? It is actually not, it is estimated because of the trend at which it is growing. And I want to share with you that the growth rate at which we are growing is 11%. I repeat, the growth rate at which e-commerce business is growing is 11%. So in terms of dollars, it is $100 billion, and equivalent is 8 lakh crore INR. That is the size of Indian e-commerce business. So almost every small business, every micro small business, they want to actually have a digital presence. So with this brief, I will leave the floor open for questions. And while answering the questions, I want to actually give you clarity, give you examples on the tax part as well as an accounting part. Third part before I conclude. Why I was very skeptical about the term called accounting is the entire transaction will be black and white when you do in e-commerce, because your bank account is connected, and under goods and service tax, there is a mandatory provision that every e-commerce operator has to register. There is no basic exemption. This 20 lakhs, 40 lakhs exemption is that for e-commerce. No, for a service provider up to 20 lakhs, for a goods and service goods, they have up to 40 lakhs exemption. Forget about all exemptions. The moment you are an e-commerce operator means the third party. He has to register. Every transaction, what he does, he has to inform. Now, online advertising. You pay for an online advertiser, some online advertiser. So, for example, there is a foreign website. So, they don't have an office here. Digital marketing. You are doing digital marketing in the foreign website. So then you have to pay to that particular company. The moment you are paying to that particular company, you have to collect 6% additional. You have to deduct 6%. It is equivalent to the taxes for them. So it is called equalization levy. So these are all the concepts that has been brought out recently. That wherever the digital kind of e-commerce presence is there, taxes play a very significant role. And recording those transactions has become very, very, very critical. I'll give you one more interesting example, which I will say as a SOP. By coming for an e-commerce business, all this is fine. Any benefit is for them. Any comfort is there. Yes. If you do, I repeat, if you do your turnover up to 10 crore, I repeat, up to 10 crore, and 95% you do online, maybe 5% only you do cash collection. If it 100% online, very good. Say monthly turnover is let us say it is 10 lakhs. So then annual turnover is actually 1.2 crore. Monthly turnover is 50 lakhs. So then annual turnover is 6 crore. So entire 6 crore or 95% and above of the turnover you do online. Then no need for an audit at all. There is no need for an audit, but books of accounts maintenance is mandatory. So the moment transactions are online, you may need an online package, an online cloud package to actually capture those data. Capturing those data will be very easy. You need not again type it. The data is already there. I repeat again, data is already there in online. So capturing those data and again putting in your cloud accounting will be very easy. You don't need to repeat that activity. In the normal accounting package, you need to take the invoice, take the purchase bills, and then again key, again you have to get. No, that is not required. So these are all the maturity levels which I was discussing about. So now I will leave the floor open for participants to ask questions. So one by one, we will get the questions. Okay.
Sir, I think we have one question from Hardik, which is, do I need to do PTRC or PTEC registration in other states if I take Amazon FBA services in that state just for online selling?
Can you repeat the question?
Yes. So the question is, do I need to do RTC or PTEC registration in other states if I take Amazon FBA services in that state just for online selling?
So what is FBA services? Oh, that is fulfillment by Amazon. Okay. Right. Now, let me explain this particular question. Hardik, this professional tax registration certificate is mandatory. Actually, I will not say it is not mandatory. You need to take a registration, and it is not that, say, if you are educated. See, today, as an educated person, you run a business, you do a profession. You need to enroll yourself as a, you need to pay profession tax. Now, this profession tax is applicable for everybody. This is actually a state tax. Now, this Amazon being a e-commerce operator, when you register with Amazon as a vendor, he will ask various complaints. So your GST registration, your PAN number, and your professional tax registration certificate or professional tax enrollment certificate. So all these are mandated. So without that uploading these information, they may not register. This is actually an option. I will not say it should be mandatory, but being an international company and they want to comply 100%, and in case if there is a violation by their vendor, they may ask, do you have you asked questions all this? So they want to be, being a international company, they want to ensure that whatever Indian laws are there, it is complied by the respective vendor. So therefore, PTRC registration in other states, if I take Amazon FBA service in that state just for online selling, good question. Wherever you belong to, you have to register. For example, you are from Tamil Nadu, you are from Gujarat. So Gujarat professional tax enrollment certificate you take. But the problem is you may have buyers outside Gujarat also. You are in Gujarat. You register with Gujarat professional tax enrollment certificate. But you have people across other states who will buy. Do you need to enroll in that? Actually not required. You are not doing business in that particular state. You are sitting here and giving service, and you are going to give only an IGST bill or a local the SGST and the CGST bill. So you need not register with other states. Then you have to register with all the 29 states. It is not required.
Okay, thank you for that question, Hardik. Let me pick up the next question, sir. So the next question is, we are running, the question is from Kasturi Rangan. We are running one e-commerce platform. We are selling t-shirts, socks, phone cases, kind of things. We are selling almost all the states. For now, we are creating state as a debtor in our books. Is there any other better way to record our sales?
Oh, state as a debtor. Maybe you can create that as a group. For example, you have in Mizoram. So, sorry, thank you. So in Mizoram, you have some 7-10 customers or 100 customers. You can have Mizoram customer. So like that also you can have. So your question is, we in our books, we are creating state as a debtors in our books. Is there any other better way to record our sales? So okay, sales in terms of e-commerce, cash sales. So I think that's a best way. State-wise recording will be best because your collections also you will do it. So I will say the best way is the method what presently you are following is the best, unless otherwise your business grows in a particular state. For example, Uttar Pradesh, you have more customers. In Telangana, you have more customers. Maybe you want to classify your customers into districts, district-wise or city-wise. Then you can go for classifying, having a sales state-wise and district-wise also. Otherwise, state-wise, having your customers is fine. But you are using a word called debtors. Is it that you are giving credit to them, or is it a cash sales? If it is a cash sales, state-wise is fine. If it is debtors, means if it is on credit sales, I will recommend you have to go by customer wise only and group it based on state. So that will be a best one. So next question.
It's from Janvi Veturi. If a third party is maintaining website and digital marketing and logistics agreements with logistic partners as well, but the risk is with seller and money goes directly to seller, Will it be called as eco?
Oh, good question. Wonderful question. If a third party is maintaining website and digital marketing and logistic agreements with logistic partners as well, but the risk is with the seller and money goes directly to seller, will it be called as an eco? Actually, the moment it is an e-commerce operator, who collects the money is a business model. No, you collect or I collect. Ultimately, business is done. Responsibility to the government department, tax department will be the e-commerce operator. I repeat, the responsibility of collection of taxes and remittance of taxes, deduction of taxes will be with the e-commerce operator. So naturally, e-commerce operator, to ensure that he doesn't default in payment of taxes, the routing of the payment will be only through e-commerce operator, because the control is with the e-commerce operator. Through e-commerce operator only sales happen. So payment will come only to e-commerce operator. He will not give it directly to the seller. He will only route through the e-commerce operator. That is the best model, and that is the risk-free model for the e-commerce operator. Otherwise, it is a very highly risky for an e-commerce operator. And if seller doesn't pay the taxes, e-commerce operator will be default. So therefore, the bank account control, collections, everything will be monitored and complied by e-commerce operator.
So next question is from Subrat Mohanty. If eco is liable to collect GST and pay to government or seller?
Oh, good question. The e-commerce operator is liable to collect GST fully. I'll give you an example. So we were speaking about Amazon, Myntra, so many other sites. So now somebody is making an order. So there is one store, say there is one shirt available. That shirt is ordered by some buyer. Then it is an online display. The payment will be collected by the e-commerce operator along with GST. Or there is a cell phone. So there is a electronic goods. The invoice will be raised by the e-commerce operator along with GST. Payment will be collected and it will be withheld. There is a percentage of TDS. There will be a tax collection. So it is called tax is collected and retained. So technically it is deduction only, but in GST they use a word called TCS. So out of it is 18%. 1% will be retained. 17% will be paid to the seller. So that's seller only. Technically he has to file the GST return, but e-commerce operator will also upload a return stating that this is the sale done on his behalf and 1% is collected and I'm paying. So 18 has to be collected and remitted to government. 18 will be collected by eco. 17 will be paid to the seller. 1% will be paid by the eco to the government. Again, it will go to the account of the seller only. Seller will remit 17 plus 1% which has been paid by the eco, which has been coming to the seller. So technically 18 will be paid by the seller only. But please ensure that if eco is liable to collect GST and paid to government or seller, 1% will be paid to government, 17% I will give to the seller, and seller again will pay to government. So ultimately 18% will go to government.
Next question, sir. It's from Manan Baba. Hi, I'm a seller on Etsy. I mostly sell to customers outside India, that is exports. Recently, Etsy is deducting 1% TDS and 1% TCS on my sales. Please tell me how to file GST returns for these export e-commerce sales. Also, I do digital marketing ads on the same website for my listings. I receive invoice from Etsy for these services, but they don't charge any GST. Do I need to pay tax on reverse charge on these digital marketing expenses?
Can you repeat the question? I'm a seller on Etsy. I mostly sell to customers outside India. Okay. Then that is exports. Recently, Etsy is deducting 1% TDS. This is what I said. And 1% TCS on my sales. Because Etsy is an e-commerce operator. Please tell me how to file GST returns for this export commerce sales. Good question. Also, I also do digital marketing ads for the same website for my listing. I receive invoice from Etsy for their services. Now you are a resident in India. You have a permanent establishment in India. If you have a permanent establishment in India, the concept of equalization levy will not apply. It's technically a service, and for digital marketing, you will collect the 18% GST. So there are two questions here. One by one, I will answer. So the first question is with respect to exports outside India. Even if it is export, so please understand, the moment you are an e-commerce operator, so you are see the export. There are certain obligations with respect to export. So you have somebody buyer outside India, you are an exporter. And as an exporter, you need to actually, you are obligated to file certain things directly to the customs department. So here, it doesn't process through a customs department, even though customers are outside India. So therefore, this concept of the deducting 1% will apply. And please tell me how to file GST return for this export e-commerce sales. Okay. Now you have to raise an invoice. I repeat, you have to raise an invoice. And if it is technically, normally, if for an export GST, there is you will not raise a GST amount. So there is no GST rate for it. So it is actually called as a zero tax. So it is not nil rate; it is zero rate. Now, zero rated invoice you have to raise. Now, this 1% TDS, if you are raising a 0% invoice also, even then 1% is deducted. This 1% is only an indication that your data is actually captured and informed to Government of India. And technically, this 1% will lie in your credit only. So this is actually not input tax creditor. It will not be in your credit ledger. It will be only in your cash ledger. I repeat, it will be in your cash ledger. Now, since it is in your cash ledger and you are an e-commerce export e-commerce sale, you can apply for refund, and that 1% also you can get a refund. I repeat again, 1% TDS is deducted. That is actually will credited to your cash ledger. You can apply to refund, and you can ask a refund on your 1% also, because it is a export e-commerce sales. So the first question is answered. Come to second question. Also, I also do digital marketing ad on the same website for my listing. Oh, so you yourself give services. I receive invoice from Etsy for these services. So there are actually two things. There will be two services. You give services, digital marketing. I also do digital marketing on the same website for my listings. Okay. So digital marketing is done. Okay. So they give service to you. Good. So then you are not doing digital marketing. So they do digital marketing for your products. So therefore, you receive an invoice from Etsy for these services, but they don't charge any GST. Very good. Why? Because they are outside India. Okay, they are outside India, and services provided to India, here you are receiving services. So therefore, do I need to pay tax and reverse charge on this digital marketing expense? Answer is yes, you have to pay. Thank you very much.
The next question is from Sri Ishwari Enterprises. We are a startup in B2B area, especially to Horka segment. I'm sorry if I'm pronouncing it wrong. Those people who will not have ITC option, and we have our own seller as well as a third-party seller. Is this legally allowed to have this kind of system? How to handle the taxation for this?
Can we have a clarity on this question? We are a startup in B2B area. Okay. Especially to which segment? Okay, some segment. Those people will not have, I think it is unorganized sector. Okay. This is to an unorganized sector whose those people will not have ITC option, and we have our own seller as well as third-party seller. Is this legally allowed to have this kind of system?
So we have a small clarification from Sri as well. It's hotel, restaurant, and cafe. That's what they mean.
Okay.
Yeah.
Okay, right. I understood. So we are a startup in B2B area, especially to the hotel, restaurant, and the cafe segment. People will not have an ITC option. Agreed. And we have our own seller as well as third party seller. What is that particular transaction? We have our own seller as well as third party seller. Is this legally allowed to have this kind of system? How to handle the taxation for this? Can you give the second clarity on the second part.
They have also posted another clarification here. We are into supply of all their needs, goods, as well as services.
Okay, good. So now I have understood. So we are a startup, and they will not have ITC, and we have our own seller, and we supply all their goods as well as services. Okay. So is this legally allowed to have this kind of system? How to handle the taxation for this? Okay, this is you are going to sell separately. This invoice, you are going to invoice them, and in GST, at GST you are going to invoice. Now this is an e-commerce activity or what? No, it is not an e-commerce activity. It is B2B activity, business to business, and you raise an invoice with GST, and for them that there is no input tax credit for them. They will pay taxes, but it is a cost to them. I repeat, they will pay taxes. It is a cost to them, even if there is an input tax to their in their form number. They have to actually reverse their input tax credit. So this is the system you have to follow. So is it legally allowed? Yes, it is legally allowed. And to have this kind of how to handle the taxation for this. So step one, you will raise a GST invoice. You will collect GST and you will remit it. Second, the GST paid by the hotel, restaurant, and cafe, it is a cost for them. So if they buy 100 rupees plus GST at 5 rupees, 105, they have to add services, maybe another 15 rupees will be their cost. 105 plus 50, 120. They'll add a profit of 5 rupees, and then 125 they will sell. So, and for them, if they are coming under the what do you call it as the turnover within a limit, they will go for a consolidated scheme. Else, they will pay their 5% tax. 5% tax. So they will collect that 5% and they will remit. So no ITC for them.
Thank you, sir. So the next question is from Parikshit. Did virtual office in other states require any registration numbers of that state?
No, technically, please understand one thing. What is meant by virtual office? A virtual office is it is only a cloud office. So there is no you can't say the virtual office in other state. How do you say virtual office in other state? So there is no physical office, and to have a GST registration, you need a physical address. So virtual office in other state require any registration numbers of that state. So you can have as many virtual offices, but to have a registration, you need an address. So that is a fundamental requirement. So with a virtual office, you cannot go for a registration. Physical address is must for, it can be any person's physical address. So virtual office you have in Gurgaon, but you want to take a registration in Gurugram, in NCR. You sit in Bangalore. You say, I have a virtual office. People can actually, you have a cloud, and in that you service to the Gurgaon people. Now, do you need a registration there? If you need a registration and locally you want to raise an invoice, then you need an address there. So without a physical address, registration is not possible.
The next question is from Kasturi Rangan again, I believe. We are selling almost 15 products, sir. Is HSN disclosure for all the product mandatory? How many digits is required? 4 or 6? Please clarify.
Okay, this depends upon your turnover. You didn't mention about your turnover. So if your it is based on 4 or 6 based on your turnover in the last year. So if it is below a particular amount, then 4 digits is sufficient. If it is above that limit, then 6 digits is mandatory. So don't worry about that. If you can give all the 6 digits or even 8 digits, space is there. Give. You want to restrict your number of digits, then based on your turnover, you check whether you are below that 5 crore limit or above that 5 crore limit. Then 4 digit is sufficient or 6 digit is mandatory. 6 digit you have to do.
Next question from Hardik. If we do stock transfer from one GST state to another GST state of same company, then the stock transfer should be added in final turnover calculation. In GST portal, I have 4 states, so it shows total of sales and stock transfer.
Oh, that's a good question. See, please understand one thing that the concept of stock transfer in the previous law had some exemption. But now under GST, if it is one state to another state, for example, from Tamil Nadu to Karnataka, or from Karnataka to Maharashtra, so two states, you have two registrations. So this same company, Bangalore one registration, Bombay one registration. From Bangalore office, you are transferring goods to Mumbai office. It is sale to Bangalore. It is a purchase to Mumbai. I repeat, it is purchase to Mumbai. So it is a sale. So whatever GST, that will be an input tax credit. Now when you consolidate, the sale in your Bangalore, purchase in your Mumbai, get nullified in your books of accounts. Technically, there is no sale or purchase at all. It gets nullified. So therefore, you have two questions. If we do stock transfer from one GST state to another state of same company, then the stock transfer should be added in final turnover calculation. Technically, it is not added. You consolidate. One, it will be sale, another it will be purchase. You consolidate, it will be gone. Both will be, one debit, one credit will be gone. So there is no total in GST portal. In GST portal, I have 4 states. So it shows total of sales and stock transfer. Let it show. That is only their system of presentation. In your books of accounts, how you record it, that matters a lot. Okay.
What is zero rated, nil rated, and non-taxable difference?
Good question. Actually, I'll give you examples to give you an understanding on this. For a mathematics teacher, 0 and nil both are same. So what is this? You don't understand mathematics at all. But for a GST teacher, 0 and nil both are different. If you sell an agricultural product, for example, I am an agriculturist. I produce vegetables, brinjal, aloo, okay, potato, or maize, bajra, rice, and some 10 bags of vegetable I sell. What is the rate? Nil rate. Rice, I sell 100 bags. Nil rate. It is not zero rate. What is the difference between nil rate and zero rate? In nil rate, you buy fertilizer, you pay GST on that. That is an input. Can you take input credit on fertilizer? No, for agriculture, because it is nil rated. But you buy fertilizer, you manufacture something, you export. When you export, you claim zero rate. If it is zero rate, whatever GST you have paid on your input, you are eligible for refund. In nil rated, whatever input you have paid, whatever GST you have paid, you are not eligible for refund. So zero rated, nil rated. Nil rated, exempted products, exempted services are nil rated. Zero rated are products or services which are exported outside India. Non-taxable. Okay, this is a very good question. Non-taxable doesn't come under GST at all. Like for example, your petrol, diesel doesn't come under GST. It is it taxable under GST? No. It is taxable under excise. It is taxable under VAT. Similarly, the Indian manufactured foreign liquor, IMFL, is it taxable? Taxable under VAT, but not taxable under GST. So that is the main difference. So non-taxable doesn't come under GST at all. Zero rate and nil rate come under GST, but one is zero, one is nil rate.
Next question, sir, from Janvi. Is there any legal provisions related to COD collection?
So what is COD? They mean?
I think it's cash on delivery, sir.
So, is there any legal provision related to COD collection? Cash on delivery. Is they mean as cash on delivery?
I assume so, sir.
Okay. So, there will be a, say, I will speak from, because the question is legal provision. So, I'll presume that it is a GST question. So, you raise an invoice because order has come. You raise an invoice. So, until the product goes and get delivered and cash is collected, cash you are collecting along with GST. Now, if the person is rejecting the, no, I don't want it, then you have to cancel that particular invoice. So, it is only a order that is confirmed only when it has been accepted by the particular customer. So that is what the legal provision is all about.
Sir, I think we can take one final question. The time is almost up. So the final question for today would be, what are the implications, how to segregate digital services and exports and manage accounting?
Oh, good. So I will say you better have a software, a cloud software. I will recommend you to have a software like Zoho Books and connect all your business transactions to Zoho Books, where digital services, exports, everything you can actually classify. And the Zoho Books are, I will say, it is such a intelligent tool. The business, the bank statement, when it scans the bank statement, you can it actually by the previous examples, by the way in which previous transactions are being keyed in, it will be intelligent enough to suggest you that this is a digital service, this is an export service, this is a 0 rated, this is actually 8% rated, this is actually expenses. And expenses, it will itself say this is lunch expense, this is rent expense, this is advertisement expense, based on the past experience. That is the way at which the Zoho Books has been built up. It is actually intelligent. So it is like you train you. It is like a clean slate, and slowly as you use Zoho Books, it gets tuned to your requirement. And then you open the bank statement for 1 month. It will scan it and it will post the entries, and it will wait for you to actually confirm those entries. To that extent, it is automated. It is automated. And even if you feel very bored, you can even customize Zoho that you yourself post the entry and post it also. But problem is sometimes there may be new entries, it may misinterpret. So that is why you need to actually use the tool to such extent that it suggests you what is the entry, and you understand what the entry is and you confirm it. So such a intelligence has been built in. So we say you can call it as artificial intelligence, or you can call it as temporary intelligence, whatever it is, but that is how the systems are built.
Thank you so much, sir. Thank you for answering most of the questions. As for the attendees,
We have other questions also. Maybe after your presentation, if time is there, we can take.
Yes, sure. So we did not have a presentation per se. We just wanted to introduce an application to those of you who may not know. So while we are here and on the topic of e-commerce, I'd like to introduce you all to Zoho's very own e-commerce software, which is Zoho Commerce. Zoho Commerce is an online store builder which helps you design a beautiful website and a fully functional digital storefront for your shop. So if you're selling goods, Zoho Commerce is a great option. It also enables you to fulfill and manage your online orders and market your brand. What's in this for the business owners and the accountants is that Zoho Commerce can save you precious time. It tightly integrates with Zoho Books and Zoho Inventory. We know that integrating e-commerce platforms with accounting software can be complicated, but with Zoho Commerce, your products, your customers, the orders placed online, invoices, and the payments reflect in Zoho Books and Zoho Inventory instantly. You can track these records in no time and with zero manual effort. So, and also there's essentially no value mismatch, or there's no sync breakage, and the stock values are updated instantly. With the integration between Zoho Books and Zoho Commerce, you can handle your taxes effortlessly with the integration. So if you'd like a demo, a free demo of Zoho Commerce, visit the link that I'm dropping you off in the chat box right now. And that's just an introduction that I wanted to give. So do you have time to maybe go through, I think a couple of people might be interested to talk to you. Do you want to talk to them?
Yeah.
Okay, perfect. So there was 3 people had raised their hands earlier. I'm just going to see if they're available to talk now.
Amarnath.
Beulah. Yes.
Beulah and Gautam. Amarnath, Gautam, Sarathi.
I've just enabled Amarnath to talk. Amarnath, if you're available, I've given the option for you to, I've enabled the audio for you. You can go ahead and ask your question to Gopal sir.
Abdul Basit is there. Gautam is there. Nitish. You can enable all. Whoever is able to do it. Others we can mute.
Okay. So, for those who raised your hands, we have enabled the audio for you.
Rashekar wants to speak. Yes, Rashekar. Good evening.
Good evening, sir. How are you doing, sir?
Absolutely fine, and thank you very much for joining. Kindly introduce yourself and the location from where you're speaking.
Sir, I'm Rajshekar. I heads the finance in CATFM India Private Limited. It's a simulation-based company. I'm from Hyderabad. Okay, so we have a e-commerce platform that is like a WooCommerce. Okay, where we are selling some innovation products. Okay, so it's like a online courses. So this we are selling across the globe. Okay, not only in India, so also in Singapore, Malaysia, Vietnam, all these countries. Okay, people are like coming to our website and buying our the training courses. Okay, so with these training courses, okay, they can buy there and they can learn. It's like a kind of a Coursera or like a Byju's kind of thing, but it's majorly focused on the engineering services. So we just wanted to understand how this GST will be considered, because presently for India we are charging 18% GST. For like other countries, if people are buying from other countries, we are not charging them any GST. And the second thing is we don't want to take the credentials or bank details of them. So that's the reason we are using some payment gateways. So we just wanted to understand what other tax compliances we have to take care of this.
Okay, so as far as you are only a service provider, so as far as the Indian buyers are concerned, you are raising an invoice with 18% GST, so you collect and you remit. But with respect to the foreign customers, it is a export sales. It is an export of services. I will say it is export of services, and you are eligible, and you have to. You are not supposed to charge a GST. It is a zero-rated supply of services. So you are raising a export invoice. So now here you will be having one obligation. For example, if in your month you have a local sale of 5 lakhs and an international sale of let us say 3 lakhs. So total is 8 lakhs. So out of total 8 lakhs, 3 lakhs is an international transaction. So then 3 out of 8 lakhs, this percentage of the total input tax credit which you are availing, you have to reverse it. You have to reverse that. That means you are not eligible for that. I repeat, you are not eligible for that.
Okay.
So you are not supposed to use it. So meaning that particular input tax credit, you have to take it as a refund. I repeat, you have to use it as a refund.
Okay.
So you have to reverse it and apply for a refund. I repeat again, you have to reverse it and apply for a refund. So without reversing, you cannot apply for a refund. So these are the compliances we have. Am I clear?
Yes, sir. Very, very clear. Thank you very much. Yeah.
Thank you, Rashid. Nitish.
Good evening, sir.
Speak now, Biola.
Good evening, sir.
Oh, very, very good evening. Please go ahead.
Sir, where do we get certificates, sir?
So kindly introduce yourself.
Sir, I'm Nitish from, I'm studying now, sir. I'm studying BCom in Dr. NGP Arts and Science College.
Okay. So please wait. They will send you because it's an online platform. Have you asked for any certificate for this course, for this session?
Sir.
Okay. So please wait, it will come. Okay. Thank you.
Okay. Thank you.
So we have Haswini. Good evening, Haswini. Raj Kanna Kalatoti. Okay, we are not able to get them.
Sir, can you hear me?
Yeah, absolutely. Can you introduce yourself?
Hello, sir. Myself, Raja Khanna from Hyderabad. So I am.
Yeah, Raj Khanna. Yeah, go ahead.
Yes, sir. I'm about to set up an export business from here. Basically agricultural and food. And
What
I'm
type of
encouraging
product?
my
What type of product? What type of product?
food. It is like pickles and then homemade sweets and stuff.
Okay, so
And
process. It's
agricultural
not
products.
agro product. It is a processed food.
Yes, sir. And then
These are
agricultural
processed
products
food.
like
Wheat is
millets.
processed food.
Yes, sir. Agricultural products are millets.
What is agro product?
Millets, sir. Millets.
So that means millets you are going to buy and sell.
Yes, sir. Buy
Then you
from
are a
here
trader.
and sell it
You are going to buy from where?
from local farmers.
So that means you are a trader.
Okay.
It is
Yes,
not
sir.
an agro product. You are a trader. You are only doing trading.
Okay. Okay.
Okay. Now go ahead. Go ahead. What is your question?
Yeah. So these food items, I want to sell it in US through friends. They want to set up a entity there, and they will sell, but I'll be exporting to them, and I
Okay.
will
So
manage. Yeah, that is one part, and I will manage their online presence
okay.
as a
So
service.
very good. Okay.
Yes.
So you are going to give web. You are going to be a e-commerce operator of their portal, and then you will get the orders online, and you will export the bulk products to which country?
First to US and then UK, sir.
Okay. So this website is targeted to customers in UK and US only. Am I right?
Yes, sir. Yes.
Not to Indian customers.
Not to Indian customers.
Okay. So that means the entire sale is a export sale.
Yes, sir.
Okay.
Yeah. Okay.
Yeah, you have to be very careful with the FSS AI certification because being a processed food, you need to get all those certifications, those
Sure.
areas and all. You have to be very clear before you do the export. Otherwise, your export will be rejected. Number one. Number two, since it is an
Okay.
export rate and GST, you will be doing it as a zero rated sale. And whatever input you have got, especially whatever GST you have got on that, whatever GST has been levied. Because any product what you buy on the GST will be there. That GST you cannot collect from the customer, the
Okay.
non-resident customer or a foreign
Okay.
customer. So you have to only sell it at a zero rate, and after once you export and prove that to the satisfaction of the department, you have to raise a refund request. So a refund application and ask for the input tax credit refund. That is a GST refund.
Okay, sir. Okay. Thank you, sir. Yeah.
So I think major questions are over. Anybody else who wish to share your question?
Yeah, hi sir.
Yeah, may I know, kindly introduce yourself.
Yeah, hi sir. I am Amarnath. I am senior accountant in one of the e-commerce seller. I have couple of queries in that ones from Hyderabad. Okay, we are supplying virtual products in multiple e-commerce platforms like Amazon, Flipkart, JioMart, and also we have our own website also is there. In between, we are we are providing mobile apps also, mobile applications in Google Play Store and Apple App Store. Okay, that mobile applications downloaded from all over world, from all countries, India and other countries also. And also we are eligible for e-invoicing. Okay, if the mobile application, it is paid application only, not for free application. Okay, we are getting the settlement from Google and App Store on monthly basis. Okay, for suppose if any person is paid for that amount in foreign countries like US, UK, Brazil, we need to generate export invoice or we need to generate normal invoice for that supplying of services.
Okay, good question. It all depends upon.
Sorry, sir.
Oh, एक minute. I think somebody else is disturbing. Am I audible?
Yes, sir.
Yeah. So it all depends upon who is your customer. If your customer is outside India and he
Yes.
gives his address, location very clearly, then you can raise an export invoice with a zero rate.
And
Right.
also we are receiving settlement for all countries in the world in the single amount only in INR, not for conversion rate also. We don't have conversion rate, we don't have conversion certificate also for that settlement.
Who is settling?
That Google is settling amount.
So then he is having a office in India. So technically,
Okay.
you will be serving outside India. You are also in India. Google also in India. Then it is a local invoicing only. Okay.
For that export also, we need to consider it as a local invoice also.
Both are in India only. Where is export here?
No, we in that one, for suppose the end customer is in US.
Let it be. The agreement is between the end customer or with Google.
We uploaded our mobile application in Google.
That's all. The arrangement is only with you and Google only.
Okay, I need to generate sales invoice only to Google, not for end customer.
Your agreement, your business agreement is only with Google.
And also Google is showing whatever is sales in India, they are deducting TCS amount. They are showing in the state wise also under the TCS.
They are e-commerce provider. They are e-commerce operator.
And also what are the export to value is there? That value is not showing in the TCS part, in the GST TCS part. Only domestic sales value is showing GST TCS part.
Because that is what I told you. No, there is no export here. It is only e-commerce business you have done. Both are in India only.
No. Here my doubt was total my sale value through Google is 20,000. Okay, in that 20,000, 15,000 sales done through India.
Okay.
5,000 sales through foreign countries, US and UK.
How do you know that it is foreign country?
Yeah, in the Google providing that Excel file from which country, which person is down.
Who is agreement is with who is making the payment to you?
Google.
That's all. You will have customers so many places outside India. That is different. Okay. You are giving service only to Google. You and Google is the you are the. He will have customers. Directly he will give service to some. But buyer seller, who is buyer? Google is buyer. Who is seller? That's all.
Okay, here that is one thing. And also we have one restaurant is there. We are supplying services.
1 minute. Amarnath, you are representing which company?
It is for, we have two companies is there. One is for IT services and e-commerce seller. Another one is restaurant business.
Okay, what is the name of the company?
For IT and services, it is Irsu Technologies. It is located in Hyderabad. We are supplying all virtual products, virtual VR and AR products, virtual reality products.
What is the restaurant name?
Restaurant name is Pooja Hospitality. It is one of the startup company only. Startup partnership firm, not for company. It is startup partnership firm.
Okay. So what services you are giving in that restaurant?
In the restaurant, we have dine-in services is there. We are supplying services through Swiggy and Zomato.
Okay. So now what is your question?
Here question is, whatever services we supplied through Swiggy and Zomato, how we need to file that GSTR, where we need to show that value in GSTR 1 and 3B as per latest amendment 955.
Anyhow, Zomato and Swiggy, they are going to collect the money, they are going to collect the GST, they are going to upload all this information to them, and they are the e-commerce operator. They will deduct that 1% and they will give it to you. You will pay the GST. So yes, I have to explain this part.
As a e-commerce seller, my restaurant as a e-commerce seller. As a e-commerce seller, where I need to show that my sales value in the GST.
In GST, return itself. GST in one. You have to show. Yes.
In the table number 8 or table number 7.
In your output supply, you have to show. Outward supply.
Okay, outward supply only we need to show. Yeah, right. Thank you, sir.
Thank you. So I'll hand over the session back to Divya for closing ceremony.
Right. Thank you so much, sir. Thank you so much for giving a very insightful session. For the folks who attended, thank you so much for attending the session. I hope you found the session insightful. And please thank Gopal sir virtually with a thumbs up if you can. Thank you so much for attending. Then we'll follow up with you. And if you have any questions, feel free to email us. I'm going to send you a follow-up emails so you can reply to that email if you have any questions, and we'll get back to you. Thank you so much again. Thank you, sir.
Thank you very much.